The top business stories live from the Sky News City studio. A surprise fall in UK house prices, down for the second month running, according to Nationwide. The US Federal Reserve is expected to keep interest rates on hold later, but for how much longer? Plus, we'll be in Riyadh as more than 700 business leaders and government figures gather for Saudi Arabia's Davos in the desert. Good afternoon. This is Business Live with me, Ian King. UK house prices unexpectedly fell in April for a second month running, according to Nationwide Building Society. The UK's second largest mortgage lender said house prices fell by 0.4% in April. That followed a fall of 0.2% in March. As a result, the annual rate of house price growth has fallen from 1.6% in March to 0.6% in April. Nationwide said the fall probably reflected ongoing affordability pressures, with longer-term interest rates rising in recent months, reversing the steep fall seen around the turn of the year. It said house prices were now around 4% below the all-time highs recorded in the summer of 2022. Policymakers at the US Federal Reserve will conclude their latest two-day meeting this evening, with the US economy and employment still growing strongly and inflation still above the Fed's target rate. The markets expect the central bank to keep interest rates on hold. But all eyes will be on the Fed Chair Jerome Powell's subsequent press conference in search of hints on the likely timing of possible future interest rate cuts. Well, joining me now is Christian Lawrence, Senior Cross-Asset Strategist at Rabobank. Christian, good to see you today. Any doubt in your mind that the Fed will keep things on hold today?
It's great to be here, Ian. No doubt that they'll keep things on hold, and there isn't a new set of projections at this meeting. So all eyes are on Powell and the press conference, where he'll be asked questions by journalists. And it really is up to him to try and walk that line and try and get the right message across to markets.
I mean, the Fed had done a pretty good job in terms of getting inflation back down towards the target rate. But over the last couple of months, it's been blown off course. Why do you think that is?
Well, I'd probably argue that it's not really the Fed that managed to get inflation to come lower. It was more driven by the supply side, the decline in energy prices that we saw last year, supply chains easing off their very tight situation during COVID. And it was really that helped drive inflation lower, because when you look at core services, which is the area that's more supposed to be impacted by the Fed, that inflation remains very sticky indeed. And actually, I think the outlook for the next couple of months could be inflation heading a little bit higher.
We had some quite closely watched labour market figures out today. I mean, they do point towards wages growth starting to moderate. Do you think the Fed will take any comfort from that?
So I think the interesting thing with the labour market is we're coming from such a tight position. Now, without a doubt, things are loosening. The unemployment rate is heading higher, but it's in a very gradual fashion indeed. And when you look at wage growth, we had a pretty big print in the ECI number recently, and on a real basis, so adjusting for inflation, we're back in positive territory again, which will certainly be a boost to consumption. So while the outlook for the consumer is nowhere near as strong as it was last year, it's fair to say they're holding up reasonably well, which is one of the reasons why the market has priced out so many of these cuts it was expecting earlier this year.
Exactly, and that's had some very, very interesting side effects, first in the bond market and then more recently in equities. I mean, what do you think specifically the markets will be looking for from Powell this afternoon?
So at the beginning of the year, there were 7 25 basis point cuts being priced in. And now there's only a little over 1 25 basis point cut being priced in. So I think the bar to removing that rate cut is pretty high. The market's moved a long way very quickly indeed. So we'd need to see a very hawkish Powell in order to see rates rise on the back of this. But if that did happen and we got a strong labour print on Friday, it's fair to say the market might start thinking about rate hikes again. Now, as I said, I think the bar to that is pretty high. But certainly the idea of aggressive rate cuts this year, that's out the window. We're not going to see any rate cuts this summer, and it's going to be more a question of do they cut in the fall.
Absolutely. What about the dollar, Christian? I mean, that's been trading at sort of 5-month highs lately. To what extent is that helping or hindering the Fed?
Well, there's two things that really impact the dollar. One is safe haven bids, because the dollar is viewed as a safe haven, and the other is interest rates. And of course, in April, we saw a safe haven bid on the back of escalating tensions in the Middle East, and we saw rising rates. So that really boosted, it was kind of a double whammy for the dollar, if you will. Now, for the Fed, they're happy to see a higher dollar. Yes, the US is a relatively closed economy, and the strength of the currency doesn't impact the US in quite the same way it does some other countries. But certainly a stronger dollar for the US at the moment, when they're trying to get inflation lower, that's not a bad thing.
To what extent does this hurt Joe Biden? I mean, obviously, I imagine he would like to see the Fed cutting interest rates, but some of his critics might say, well, he actually helped build this up with IRA, the Inflation Reduction Act, ironically named, which has just stoked up demand in various parts of the economy.
Yeah, I mean, we should be clear here. It doesn't matter if you're talking about the Democrats or the Republicans. Fiscal policy has been loose and it will continue to be loose. The idea of austerity was kind of thrown out the window a couple of years ago. Now, of course, either party does this in different ways, but the bottom line is there is no fiscally conservative party out there at the moment. And while there is the argument that cutting rates now might provide a boost to Biden ahead of the election, really rate cuts take quite a while to filter through to the economy. So yes, you could get a little bit of a boost for equities, but I personally don't think the Fed is really being concerned about the election. They're thinking more about what is best at the moment from their projections. What I will say, though, is if we do see a Trump victory in November, that is going to be inflationary for next year, because while there's more protectionism, whichever party you look at, we do expect to see more in the way of import tariffs under a Trump administration.
Very good point to make there. Christian, we've got to leave it there. Been a while since we've seen you on the programme. It's nice to catch up again. Thank you.
Great stuff, Ian. Thanks.
Some other business news stories for you now. And shareholders of Flutter Entertainment have voted today in favour of moving the gaming giant's primary stock market listing from London to New York. Flutter, which owns Paddy Power, Betfair and Sky Bet, will retain a secondary stock listing in London, enabling its shares to be traded here. But the move means Flutter will have to be removed from the FTSE 100, where it's currently the 24th biggest company, which will oblige some investors to sell the shares. Shares of GSK have risen by more than 1.5% today after the drugs giant said profits for the year would be better than expected. GSK said it now expects to grow operating profits this year by between 9 and 11%, up from the previous guidance of 7 to 10%, thanks to strong demand in particular for Shingrix, its blockbuster treatment for shingles, as well as for Arexvy, its treatment for respiratory syncytial virus. Well, GSK was reporting sales of £7.4 billion for the first 3 months of the year, up 10% on the same period last year, with its vaccine sales rising by 16%. The consumer healthcare group behind Sensodyne toothpaste and Advil painkillers said this morning it was benefiting from the impact of recent price increases. Haleon, whose other brands include Centrum Vitamins and Minerals, was reporting a 3% rise in underlying sales during the first 3 months of the year. But the company, which recently sold its chapstick brand, warned it expects the operating environment to remain challenging this year. The company on Tuesday announced the closure of a factory in Maidenhead, Berkshire, with 435 jobs potentially affected. Shares of Haleon have been off by as much as 3% today. And Next said today that its sales during the first 3 months of the year were largely better, slightly better than expected. But Next insisted it was not changing its profit or sales forecast for the year. The fashion retailer said this was because it expected sales during the current quarter to be weaker than they were in the same period last year, when it benefited from particularly warm weather from late May through to the end of June. Well, Next said that sales during the 13 weeks to last Saturday were up by 5.7%, which was slightly better than the 5% it had been expecting. Now, more than 700 business leaders and government figures, including the General Atlantic Chairman Bill Ford, the ExxonMobil Chairman Darren Woods and the UK Foreign Secretary Lord Cameron, have been gathering in Riyadh this week for the World Economic Forum's special meeting. The event, nicknamed Davos in the Desert, has also seen the likes of Microsoft, HSBC, BP and AstraZeneca represented. Well, apart from trying to encourage growth, the event also marks the latest attempt to help turn Saudi Arabia into a global economic superpower. Well, joining me now is Baz Koyman. He's Chief Executive and Asset Manager at DHF Capital, Saudi Arabia. Baz, good to see you this afternoon. How has the event gone?
Thank you so much for having me, Ian. It's extremely interesting to see, especially the first topic from our side. We really like to see the technical discussions, the AI discussions, the global questions about AI and jobs. About 70% of people are currently in some studies afraid of having their jobs adjusted by AI or even replaced by AI. And it was one of the more worldwide topics about regulation and a very interesting point for everybody in last year's and continuing in this year's World Economic Forum.
Now, the Kingdom's obviously trying to reinvent itself as a high-tech hub and also a key business and leisure destination. How do you assess its progress to date?
It's an extreme quick process. We have seen Dubai rise over the last 6 years with the DHF having an active office in Dubai, lately also expanding to Bahrain. And we just see from business perspective how much rules are changing and how quick they are changing to open international business into Saudi Arabia. We see that the international community is very welcomed. We see this with the 700 delegates now from all over the world. And it's interesting how quickly this country developed in being able to host a forum like this infrastructure-wise and also gaining so much international attention with the mega projects and mega structure projects over the last year.
How important is the Kingdom in terms of helping the US maintain stability in the Middle East?
I think the whole GCC region is very much concerned about the stability in the whole region, and Saudi is one of the very large forces supporting that stability, and very important for the growth of the GCC that we do have stability in the region here.
To what extent did the conflict between Hamas and Israel hang over the event this year?
Maybe not so specifically at this moment. Of course, in the last few months and also the last few weeks, we have seen a lot of developments there. I myself had even flights rerouted, not being able to fly over restricted airspaces. So I think it was more of a feeling than of an actual issue for travel or attending the conference. So in generally, everything is quickly, let's say, back to normal in Saudi, Dubai, Bahrain itself. But the conflict, of course, is still a daily topic of discussion.
And how much in evidence this year was Crown Prince Mohammed bin Salman, obviously the Kingdom's de facto ruler?
So it's very interesting to see how close actually all the local families, the royal families, the ruler himself are interested in not only their own topics of their own country, but also all the world topics. So I've seen a lot of amazing discussions and possibilities for the expansion in Saudi Arabia itself. The GCC region and also the technology increase and the intelligent economies rising, where AI is used, where Internet of Things is used, where 5G is being deployed in rural areas. It's all been a very interesting first technology discussion day, moving towards global economy next.
What is really interesting, Baz, it seems to me, is that when the first of these events was held, it wasn't long after the death of Jamal Khashoggi, and a lot of people stayed away. They're all back. The real power brokers of the business world were all there this year. It seems to be a real vote of confidence in the Kingdom, if you like.
Absolutely. I think that all international companies are very warm welcomed at this moment. As I said, a lot of quick changes has been made. It's been westernized very quickly. We've seen that first in Dubai over the last few years and the UAE. We've seen that now very quickly or even quicker happening in the Kingdom of Saudi. And I think a lot of international companies are welcome here. A lot of the banks we are partnering with are here. So it's an extremely welcoming community, and that has changed very quickly.
OK, Baz, have to leave it there, I'm afraid. Good to talk to you. Thank you.
Thank you so much.
Still to come here on Business Live. We'll have a look at how the markets have finished up this Wednesday afternoon. Stay with us.
Emirates Premium Economy. Maybe one day all airlines will have seats like this. Fly Emirates, fly better.
Well, the oil price has sold off sharply this afternoon to hit its lowest level since the 21st of March. That follows news of a sharp rise in US crude inventories. A barrel of Brent crude will currently set you back $83.87 a barrel. That's off just over 2.75% on the day. On the equity markets, the FTSE 100 has finished off just over 0.25%. It would have been worse had it not been for AstraZeneca and GSK. They contributed nearly 12 points to the index on their own. That, of course, on the back of GSK's strong trading statement today. Weighed against that, the oil majors BP and Shell. They have together chipped 20 points from the index on the back of that weaker crude price. Outside the FTSE 100, the investment services group AJ Bell is up 3% on supportive broker comment. To the downside, Aston Martin Lagonda has fallen by some 6% after it reported a bigger than expected quarterly loss. Further down the corporate food chain, the gold explorer Oriole Resources is down 6.5% after its chief executive unexpectedly resigned. Most European markets, by the way, closed today for the 1st of May holiday. Over on Wall Street, well, equities have largely opened to the downside ahead of tonight's meeting of the US Federal Reserve. Among the features, Advanced Micro Devices is off 7%. Its sales forecast has been poorly received, while another company that also issued a downbit sales forecast is Starbucks. That was after the closing bell last night. The shares have fallen by nearly 16.5% this afternoon. Over on the currency markets, as I mentioned earlier in the programme, the dollar's trading at close to a 5-month high against tonight's rates decision from the Fed. Sterling actually more or less unchanged right now against the greenback. It's off, however, by a fifth of 1% against the euro. The single currency also up by about a seventh of 1% against the dollar. Well, joining me this afternoon is Lindsay James, investment strategist at Quilter Investors. Lindsay, great to see you today. We should start, I guess, with GSK. I mean, this is a company where the mood has been improving for quite a while now, it feels.
Yes, that's right. And they have got off to a very strong start this year as well. They put out Q1 results this morning. They managed to beat on both sales and profits. They've raised guidance for the full year, and they expect sales growth for the full year to come in at the top end of the range. Now, I think it's quite unusual to actually see a company raising their guidance this early in the year. So it really does speak to their confidence, I think, in the sustainability of some of the growth trends that they're seeing. Now, really the driver of this is their vaccine business. There's a couple of vaccines within that, one that treats shingles, one that treats RSV, which is a virus that can be a precursor to pneumonia. And they're seeing really good growth rates. Penetration's quite low, though. The addressable market is huge. And so I think they are quite rightly relatively excited about where these products could go.
Yeah, those two in particular. It feels like we're only really in the foothills of how big they may become for GSK.
Yeah, that's quite right. And we also have to bear in mind that growth have been one of the reasons investors have been quite concerned about the business. They've got blockbuster patents rolling off in 2028. So it looks like they are starting to build products that could take the place of some of these. But we've got some overhang, of course, litigation, a recurring theme in this sector. And this one's about Zantac. And there's arguments that there's potentially a link to cancer there. But we are likely to see, I think, some progress in this overhang potentially being removed in the coming weeks. At least there'll be a resolution of some sort. So certainly keep watching the stock.
Fingers crossed. Crikey, you've taken me down memory lane there. Zantac, once the world's biggest selling drug, of course.
Yes.
Elsewhere in the FTSE, Smith & Nephew, the medical devices company, not terribly exciting today.
No, I mean, for the part, most of this morning, it was actually top of the leaderboard on the FTSE 100. You know, it's come off a little bit since then, but still in positive territory. And I think there, you know, it's relatively muted results. We've got sales growth up 2.9%, all broadly in line with what the market was expecting. I think the reason why, initially at least, it was taken quite well was that investors have been a bit cautious about this business. They've been a little bit accident prone. Their orthopedics division in the US has had some operational issues ongoing for some time. We're starting to perhaps see a little bit of a turnaround here. They're talking about improving margins over the course of the year, and they gave a bit of colour about how they're going to actually deliver that. And investors like specifics. So I think it was a bit reassuring there to see management talking in that way. OK. I mean, you mentioned just now the fact that it's rare to see companies updating or upgrading their forecasts at this time of year. Next is a good example of that today. Well, yes. Now, that's exactly right. They had very strong, strong trading statement, a little bit ahead of where they were expected to see sales growth at this early point in the year. But they were cautious to say, look, let's just wait and see, because last year, Q2 was very strong for them. Of course, the sun came out last year in May. Let's hope that continues. And it didn't go back in, I don't think, until I think it was the start of the summer holidays, actually. But over that period, of course, we saw very, very strong sales growth for Next. So they're really a little bit wary about that being a tough comparator for Q2, and then potentially reasonably modest growth in the second half of the year. But we might yet see potentially guidance raised later on in the year if they can continue this sort of momentum. Yeah, we should remind viewers, Lord Wolfson, the CEO, is an absolute past master at managing expectations, isn't he? Well, exactly. Yes, just that. Now, what about Aston Martin? Another disappointing quarter, it looks. Oh, very much so. You know, revenue's down 10% there. We saw losses actually, you know, increasing by 90%. Now, some of this, I think, is to be expected because there's really been disruption to their production process that is planned. They're rolling off old models. They're introducing 4 new models in the second half of the year. But we've also seen net debt now over $1 billion. So, you know, that's a little bit of a concern for a business that has had debt issues for some time. Now, they've got a new CEO incoming in the second half of the year from Bentley. I think he'll be looking at these results with a little bit of trepidation, to be honest. There's a lot to be done, and there's going to be quite significant improvement in the second half of the year if they want to meet their guidance, but they're sticking with it at this point. Yeah, Adrian Hallmark, we've had him on this programme in the past. I mean, he comes with a very high reputation in the industry. Yeah, well, absolutely. But, you know, there's a huge amount of work to be done in this business. Now, they're moving in the right direction in terms of coming up with new designs, bringing those to market. But the proof is going to be in the pudding. Let's wait and see in the second half of the business, the second half of the year, if the business can really kind of move through this difficult stage. Yeah, absolutely. Lindsay, you've got to leave it there, I'm afraid. Lovely to see you again. Thank you.
Well, that's it from me. I'm back again with our morning edition of Business Live tomorrow. That's at 11:30. Of course, do hope you can join me for that. In the meantime, do stay tuned. Coming up after this short break, it'll be Mark Austin with the News Hour. All sorts of things going on in Washington this afternoon with reaction to those protests across US universities. Mark will be bringing you all the latest on that after this short break. Thanks for joining me. Cheerio.